Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the problems on income from capital gain. So far 20 problems I have completed on different methods of how to compute the income from capital gain, short-term capital gain and long-term capital gain, and also the exemption under section 54. When an SSC sold one residential house and within the stipulated period purchased another residential house, or amount deposited in capital gain account scheme in a bank, then exemption will be allowed under section 54. The last video, two problems, one problem I have done. In this problem also I am going to do the problem on exemption from capital gain. So if you want the perfect knowledge, watch the video till the end and watch the videos in continuity one after the other. Then only you can be able to get the complete command on this problems of income tax. And remember, income tax subject is a little bit difficult. The difficult in the sense provisions you have to remember. We cannot apply our own method. Whatever law has given, the same thing you have to apply. Now, before starting 21st problem, I expect my viewers to have a printout of the problems which are given in the link under my description. Take a screenshot of the solution of 21, 22, 23. These three problems. Then I'll explain. Come on, see the 21st problem. Srimati Jyoti, age 42 years, that means below 60 years, non-senior citizen, basic exemption limit 2,50,000. Owned a residential house at Haridwar city. It was acquired by her on 6th July 2004 for 12,43,000. CII, cost inflation index is 113. On 3rd December 2020, she entered into a contract to sell the house to Mr. Pradeep for rupees 40 lakh and received 1,50,000 as advance. Before the due date, the agreement to buy, Pradeep expressed his unwillingness to purchase and rupees 90,000 advance money is forfeited. Now, previous problems also I explained you the provisions regarding amount received and forfeited. Advance amount received and forfeited. So Income Tax Act says if the advance is received and forfeited after 1/4/2014, in that case the advance received is taxable under income from other sources. If the advance money is received and forfeited before 1/4/2014, then it will be deducted from cost of acquisition. So you have to see when this advance money is forfeited. Here in our problem, advance money was received on 3rd December 2020. That means after 2014. So this advance money forfeited 90,000 is taxable under income from other sources. It will not come under capital gain. Now, on 2nd March 2021, Srimati Jyoti sold the house to Mr. Varman for rupees 60 lakh. And the state government valuation is 72 lakh. So here the consideration received is 60 lakh, but the valuation, stamp duty value fixed by the government is 72 lakh. So Income Tax Act says if the stamp duty value is more than 110% of consideration received, then you must take the stamp duty value. Now actual consideration received 60 lakh. If you calculate 110% of 60 lakh, it will become 66 lakh. But here stamp duty value is 72 lakh. So in other words, stamp duty value is more than 110% of consideration. So stamp duty value should be taken as consideration received. This is the new provision according to Income Tax Act. On 15th March 2021, she purchased a residential house in Chennai for rupees 38 lakh and deposited 12 lakh in State Bank of India under capital gain account scheme to construct one more floor in the new house. After selling the old residential house, the SSC purchased another residential house within the stipulated period. Then exemption under section 54 is given, which is list of the following two amounts. Actual capital gain amount or the cost of the new house plus amount deposited in capital gain account scheme. Whichever is least, that will be allowed as exemption under section 54. Now compute tax liability if income from other head is nil. We have to suppose no other income. So what is the tax liability? That's it. Now from beginning, Srimati Jyoti, computation of LTCG, long-term capital gain for the assessment year 21-22. Consideration received, I am taking 72 lakh. This 72 lakh is the stamp duty value because the stamp duty value is more than 110% of consideration. Transfer expenses nil, no transfer, not given, net consideration. Indexed cost of acquisition. The property was acquired at for rupees 12,43,000. At that time, the index number was 113 given in the problem. And current previous year index is 301. That you should remember. Current previous year is 2020-21. So 12,43,000 into 301 by 113, 33,11,000. Deduct, you will get capital gain. From this exemption under section 54 in working note. In working note, you have to show how much exemption we are getting. So in our problem, exemption is also 38,89,000. That means the LTCG will be nil. So how we got 38,39,000? I'll show you the working notes. So here, working note number 1. The stamp duty value is more than 110% of the agreed consideration. Hence the full value of consideration, that is 72 lakh, should be taken. That's what I'm taking here. Next, the assessee sold one residential house and within the stipulated period purchased another residential house. So exemption under section 54 is allowed to the least of the following two amounts. The first one, actual capital gain amount. How much is the capital gain amount? 38,89,000. Second, cost of new house plus amount deposited in capital gain account scheme. The cost of the new house given in the problem 38 lakh and amount deposited 12 lakh. So total 30, 40, 50 lakh. The least of these two is 38,89,000. So therefore exemption under section 54, 38,89,000. This one 38 lakh. That's all. The income under other head is 90,000. 90,000 is the advance money received and forfeited. That 90,000 advance money received and forfeited is taxable under income from other sources. So here 90,000 is the income under other heads. Now which is below the basic exemption limit. She does not have any other income. So long-term capital gain nil and income under other heads 90,000. Basic exemption limit 2,50,000. That means the total income is below the basic exemption limit. So tax liability is nil. That's this is the end of problem number 21. Now 22. Mr. Khurshid Alam Khan sold his residential house property for rupees 54,36,000. This is a sale consideration. Consideration received. Before selling the house, 75,000 is spent for repairs and renovation. Advertising is given in the local newspapers. For sale of the house 26,500 and other transfer expenses 11,000. So income tax act says any expenses incurred to sell the capital asset will be allowed as transfer expenses. So in our problem, all these repairs and renovation 75,000, these are incurred mainly to sell the house. Advertisement expenditure, other, all these are the transfer expenses. So if you add up 75,000 plus 26,500 plus 11,000, you are going to get 1,12,500. In working note I have shown here, transfer expenses, repairs and renovation 75,000, advertisement 26,500, other transfer expense 11,000, 112,500. So consideration received is 54,36,000 given in the first line. Then transfer expense. Net consideration 53,23,500. Now the cost of acquisition is 4 lakh rupees 28 years ago. That means before 1/4/2001. The fair market value on 1/4/2001 is 9,50,000 and the stamp duty value is 9 lakh. So here stamp duty value is less, whereas fair market value is more. So we take the fair market value. If an asset is purchased before 1/4/2001, the assessee can choose either the actual cost or FMV. The actual cost was only 4 lakh rupees, whereas fair market value is 9,50,000. So assessee will choose 9,50,000 as the cost of acquisition. So here indexed cost of acquisition 9,50,000 into 301 by 100. You will get 28,59,500. Now see further. He added one more floor in 2001-2002 with a cost of 4 lakh, cost inflation index 100. This is called indexed cost of improvement. So during the year 2001-2002, 4 lakh rupees are incurred for addition of one more floor. So here indexed cost of improvement 4 lakh into 301 divided by 100. Current previous year index 301 and index number of 2001-2002 given in the problem 100. So 12,04,000. Add up 28,59,500 plus 12,04,000, 40,63,500. Deduct, you will get capital gain 12,60,000. 12,60,000 is the capital gain. From this exemption under section 54 is allowed here. The SSC has sold one residential house and purchased another residential house within the stipulated period. So exemption under section 54 is allowed to the list of the following two amounts. As usual, what we have done in the last problem. So capital gain amount 12,60,000 or cost of the new house plus amount deposited in capital gain account scheme. So here, how much is the cost of the new house? 12 lakh. And deposited 1 lakh rupees in capital gain account scheme. So 12 lakh plus 1 lakh, 13 lakh. So whichever is least, 12,60,000 is least. So exemption under section 54, 12,60,000. Deduct 12,60,000, LTCG will be nil. That's all. Over. 22nd problem completed. Now, 23rd problem. Srimati Vanaja sold her residential house for rupees 28 lakh. So sale consideration 28 lakh. Srimati Vanaja, computation of LTCG. Consideration received 28 lakh. The cost of which 16 years back was 3,90,000, index number 100. After selling the house within 2 months, she had started constructing the house. So exemption under section 54 will be allowed if the house is purchased or if the house is constructed. If the amount is spent on construction, then also exemption will be allowed. So in this problem, the new point is amount spent for construction. It is eligible for exemption under section 54. And deposited 6 lakh rupees in the bank under capital gain account scheme. So 4 lakh rupees spent on construction and 6 lakh rupees deposited in bank under capital gain account scheme. So total 10 lakh rupees exemption may be given. Calculate income from capital gain and tax liability if income under other heads is 9,21,000. So here long-term capital gain plus this other income. We have to compute the tax liability. Now see here. Consideration received, transfer expenses nil. Net consideration 28 lakh. Indexed cost of acquisition 3,90,000 is the cost of the house. So 3,90,000 into 301 by 100. Because the house is purchased before 1/4/2001. So we have to take the index number 100. So 11,73,900 is the indexed cost of acquisition. Deduct 16,26,100. This is the capital gain. Now from this exemption under section 54 working note 10 lakh. How we got in working note I'll show you. Exemption under section 54 is list of the following two amounts. Capital gain amount 16,26,100. Then amount spent on construction plus amount deposited in capital gain account scheme. 4 lakh rupees are the amount spent on construction and 6 lakh rupees deposited in bank under capital gain account scheme. So total 10 lakh. Whichever is least, 10 lakh rupees are least. So 10 lakh rupees will be allowed as deduction. So net amount 6,26,100. This is the LTCG. And LTCG is taxed at a flat rate of 20%. Now, income under other heads. Normal income 9,21,000. We have to compute the tax liability also in this problem. So other income 9,21,000. Now tax on normal income. So slab up to 2,50,000. Income is 2,50,000. Rate nil, tax nil. Next slab 2,50,000, 1 to 5 lakh. So 2,50,000, 5%, 12,500. Now balance. The next slab goes from 5 lakh, 1 to 10 lakh. But our income is not going up to 10 lakh. Our income is only 9,21,000. So from 9,21,000 deduct 5 lakh rupees. We'll get 4,21,000 into 20%, 84,200. Add up 96,700 is the tax on normal income. Now tax on LTCG. LTCG is 6,26,100. On this 20% is the tax. So 20% of 626,100, 125, 220. Add up 221,920. To this we add health and education cess 4%. Tax liability 2,30,797. 797. So we make it as 800. So 2,30,800 is the round off tax liability. That's all. So in this video I have completed 21, 22, 23. These three problems I have completed. Inshallah, we'll continue the next problem in the next video.